Chess. I am back with another video, y'all. And look, in today's video, this is part 4, if I'm not mistaken, of the breaking down trading for beginners video. Today in this video, I will be showing y'all how to read candlesticks faster. As y'all can see by the title of the video that we are reacting to, I'm gonna be learning as well with y'all because I know how to do this based off just how long I've been trading. But I never just sat down and watched a video explaining candlesticks, like breakdown by breakdown. So that's what we will be doing in this video. And no, this is actually part 5. Let me see. My bad. I'm doing 2 things at once. Yeah, this is episode 5. So, like I said, I'll be showing y'all how to read candlesticks. Like I mentioned in the past video, I don't really look at candlesticks until I look for my entry. I'm more so focused on just the uptrend itself, and I look for institutional candle, and then that's when, you know, institutional candles, order blocks, and that's when you actually look at the candle. So since I already explained all of that in the past videos, if you haven't done so, go watch episode 4, 3, 2, and 1 before you watch episode 5. You know, go in order. You feel me? Don't just be going all over the place with this game. But
Thing you need to know about reading candlestick charts fast. Here's exactly what we'll be covering in this video. As always, if you want more videos more often, please hit the like button, as it allows for our team to keep producing videos on YouTube. Now, here's how you actually read a candlestick. Green candlesticks are bullish because price appreciated and went upwards for the time period. Red candlesticks are bearish because price depreciated and went downwards for the time period. This rectangle area is known as the candlestick body, or the real body. These lines that stick out above and below the candlestick body are known as the wicks, or shadows, or tails. For green candlesticks, the opening price is at the bottom.
I call them wicks, and then, like he said, these are called bodies. And the reason why I am more so like watching a breakdown instead of me explaining it myself, because like I said, I don't really, like, people focus on every single candlestick. I don't. Like, some people have read the Candlestick Bible, which, I mean, can be useful, but in my 4 years of trading, I've never really, like, just dug into the Candlestick Bible at all. Like, I don't know what the patterns and all the extra stuff mean. I just know uptrend, downtrend, buy at a low, and you sell at a high. Like, that's really all I've been using, and it's been working for me. So, but there's nothing wrong with learning new information, and that's why I'm watching this with y'all, so I can go back to the basics as I'm showing y'all the basics. You feel me?
Bottom of the candlestick body, and then the close price is at the top of the candlestick body. For red candlesticks, the opening price is at the top of the candlestick body, and the closing price is at the bottom of the candlestick body. The wick ends at the top represent the highest price point of the time period. The wick ends at the bottom represent the lowest price point for the time period. Now, what does the size of the candlestick body tell you? The bigger the candlestick body represents momentum gain, as price traveled a greater distance during that time period. The smaller the candlestick body represents momentum loss, as price traveled a shorter distance during that time period. When you have a very small candlestick body, or close to no body, this is known as a doji, which represents indecision from buyers and sellers, because price swung up and swung down during that time, but then closed close to the same price as where it opened from, which means buyers and sellers got nowhere, and again shows indecision. Now, before we show this on the charts, why are candlesticks important to understand? Candlesticks tell a story and are a reflection of what buyers and sellers are doing. Meaning, the candlestick pattern that forms at that particular moment in time tells you a lot about what is going on in terms of the buying and selling occurring in the market. So traders will look at candlestick patterns and the movement of candlesticks to make trading decisions, which is also known as price action. Now let's go through this right on the charts. This here is the asset you are looking at.
So he's looking at what the fuck? He's looking at a stock, but it says NASDAQ. I guess he's looking at a stock. So within this stock, you know, we can clearly tell that we're on a downtrend right here. I don't know what time frame this is. Oh, daily. This is a daily. So I can tell that we're on a downtrend, and then it flipped to an uptrend. So, like, for me, what I'm looking at is I'm looking at the swing low and the swing high. The swing high, the swing low. But in this, there's no really like I wouldn't be able to trade this because there's no pullback. Like for example, if I was going up for a buy here, I'll wait for the market to give me a couple red candles to go back into this red candle to then take it up. But like I said, there's no pullback for real. I mean, we can take this one for example where it shot up a little bit. Like I said, this is the daily, so there's every single candle is an expression of the day price action. Okay, so this whole candle has multiple candles inside of it, but this whole candle represents a daily candle. There's 4 hour, 1 hour, 2 hour, 30 minute, 15 minute, 1 minute, 5 minutes. So there's always this, there's multiple candles inside of a candle. There's a trend inside of a trend. Okay, and that's why I stayed away from showing this from this. That's why I left this until episode 5 because this can get confusing for some people because there's a lot of new information. But for me, like I said, I really just look at the lines to make my trading way easier. But let's continue.
Yeah, and in this case, it is the Apple stock. This here is your time frame. Right now it shows 1D, which translates to the daily time frame, meaning every candlestick you see represents 1 day of time. If we were to switch this to the weekly time frame, it would show 1W, and then every candlestick you see on screen would represent 1 week of time. If we were to switch this to the 1 hour time frame, it would show 1H, and then every candlestick on screen would represent 1 hour of time. This bar below tells you the date and time. So if you take your mouse and place it on top of this candle here, you'll see the dotted lines connecting the candle to the scale below, which shows the date as January 3rd. If you move your mouse 1 candle to the right, you'll see 1 day later, which is January 4th. Again, because you are on the daily time frame, every candlestick represents 1 day of time. Now this bar to the right tells you the price of the asset. Let's say you want to know the price of this green candle here. Remember, green candlesticks open below at the bottom of the rectangle here and close above at the top of the rectangle here. So if you want to know the opening price, place your mouse at the bottom of the rectangle and notice how the dotted lines connect the candle to the scale on the right, and it shows $126.05, which means when the market opened on January 6th, the Apple stock was trading at $126.05. Now, if you want to know the closing price, place your mouse at the top of the rectangle. Look to the scale on the right and notice how it says $129.61.
So look, y'all, I'm gonna be honest. Like I said, I've been trading for about 4 years now, or 4 to 5 years. I started off with options, and then I went to forex, foreign exchange. So it's like, yeah, I didn't know that. I didn't know that. And all this time, like I said, I don't really focus on the candles by themselves so much. But that's new information for me. That's new information for me.
Which means when the market closed on January 6th, the Apple stock finished trading at $129.61. This is why green candles are bullish, because price opened at $126.05 and closed at $129.61, meaning the Apple stock appreciated $3.56 on the trading day of January 6th, which is bullish price action because buying interest in the stock drove price upwards. Now, the wick below is the lowest price that the Apple stock reached that day. Place your mouse at the bottom of the wick, and it shows $124.90 as the day's lowest price. Now the wick above is the highest price that the Apple stock reached that day. Place your mouse at the top of the wick, and it shows $130.30 as the day's highest price. So let's say you want to know the price of this red candle here. Remember, red candlesticks open above at the top of the rectangle here and close below at the bottom of the rectangle here. For the opening price of January 3rd, place your mouse at the top of the rectangle and it shows $130.24. For the closing price of January 3rd, place your mouse at the bottom of the rectangle and it shows $125.13. This is why red candlesticks are bearish, because price opened at $130.24 and closed at $125.13, meaning the Apple stock depreciated by $5.11 on January 3rd, which is bearish price action. The wick below is the lowest price that the Apple stock reached that day. Place your mouse at the bottom of the wick, and it shows $124.21 as the day's lowest price. The wick above is the highest price that the Apple stock reached that day. Place your mouse at the top of the wick, and it shows $130.93 as the day's highest price. So if you want to use the exact same charting platform we are using right now, go to tools.wisetrade.com. Price action in a depreciation of the asset as sellers and bears continue to sell more of the asset, causing the push downwards. When you see more green candles than red candles, this represents an uptrend and bullish price action and an appreciation of the asset as buyers and bulls continue to buy more of the asset, causing the push upwards. When you see a bunch of green candles together, one after the other, this shows price is gaining more upwards momentum. When you see a bunch of red candles together, one after the other, this shows price is gaining more downwards momentum. When you see a mix of both red and green candles together and sideways price movement, this shows indecision, consolidation, and a choppy market. So before we continue, we want to hear from you. Tell us in the comments below right now what topics we should cover next, as we always look at the comments to decide on next video topics. Also, please hit the like button as it allows for our team to continue to produce free YouTube videos. So, how do you identify an uptrend? You have your runs here and your pullbacks here, which means an uptrend makes higher highs and higher lows. From a price action standpoint, a moving uptrend shows bullish momentum and that the buyers are in control. So you lean towards taking long entries to trade with the moving upwards herd momentum.
Okay.
So now, how do you identify a trend change from an uptrend to a downtrend? Type 1. You have your moving uptrend through the higher highs and higher lows before a lower low forms, signaling a trend change from an uptrend to a downtrend. Type 2. You have your moving uptrend through the higher highs and higher lows before you have a lower low form, followed by a lower high pullback before the full trend change breakout and lower low. Type 3.
Traders, what do you think separates you from a 7 or 8 figure trader? The simple answer is time. The time that they spend allows them to build a better system, which gives them the
You have your uptrend through the higher highs and higher lows before you have a lower high that forms, signaling a trend change from an uptrend to a downtrend. So, how do you identify a downtrend? You have your runs here and your pullbacks here, which means a downtrend makes lower highs and lower lows. From a price action standpoint, a moving downtrend shows bearish momentum and that the sellers are in control. So you lean towards taking short entries to trade with the moving downwards herd momentum. So now, how do you identify a trend change from a downtrend to an uptrend? Type 1. You have your moving downtrend through the lower highs and lower lows before a higher high forms.
Okay, so boom, let me show y'all what I was saying earlier, okay? So like I said, right, this is obviously a downtrend. So this is a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we have the switch in momentum to where this high broke this high. So now what I'm looking for is some type of order block which I can take up. So what I will be looking at, since this high broke this one, I know that this is possibly going to retrace, which happened here, right? But when it happened here, guess what? It closed this order block. So I wouldn't even be looking at this order block no more. I was looking at the next one to take it up, right? So we have this order block right here. I don't know what time frame this is, but I'll be looking at this one. So from there, I'll put my entry at this high, right? Because I look at the opposite candle. If we're going up for a buy, you want to look at the opposite candle. So since I'm going up for a buy, I'm looking for a red candle. This is the red candle right here. I'll put my stop loss under this red candle, meaning that I would have still been in, I would have still been in the trade, even though we had this big ass pullback. And as y'all can see, I would hit take profit because my take profit is always at the next high. Okay, so that's basically how I trade. I don't focus on every single candle individually. I just look at the trend in my leg, wait for a pullback, take it up. Now, if you've been watching episode 1, 2, 3, 4, and now this is 5, everything that I'm saying correlates with each other, so all of this will make sense. If you have not watched the other videos, you will not understand what I'm saying unless you are an experienced trader or you have some type of knowledge. You feel me?
Type 1. You have your moving downtrend through the lower highs and lower lows before a higher high forms, signaling a trend change from a downtrend to an uptrend. Type 2. You have your moving downtrend through the lower highs and lower lows before you have a higher high form, followed by a higher low pullback before the full trend change breakout and high form. You have your moving downtrend
Same thing here.
from a downtrend to an uptrend. Type
Same exact thing here. We on a downtrend. Okay. Lower high, lower low. Lower high, lower low. This high broke two lower highs. It broke this one and it broke this one. So now once it comes down and it shoots up, then it broke this high again, meaning that we are now on an uptrend. Okay. So when it broke down, this is a higher low. This is a higher high. When the market pulled back, I would have been looking for entry right here. Why? Because we have, it's small, but we have a red candle right here, followed by this one as well. Well, really previous was this one. Then it was followed by this one. So that would be my entry. Entry right here at this top of the doji. Stop loss under. Take it up to the next high. Take profit would have been hit. So this is how I trade. I don't like I said, I don't like to overcomplicate it. I sell high, I buy low. I buy low, I sell high. Literally that simple.
Type 2. You have your moving downtrend through the lower highs and lower lows before you have a higher high form, followed by a higher low pullback before the full trend change breakout and higher high. Type 3. You have your moving downtrend through the lower highs and lower lows before you have a higher low that forms first, followed by a trend change breakout and higher high. So, how do you identify a sideways ranging market? Prices making same highs and same lows and moving in a sideways direction. In markets like this, look to take trades in both directions with confidence.
No.
So, how do you like to take trades in both directions with confidence?
Which allows you to take the trades in both directions. No, do not do this, y'all. Just wait. And this is what I'm saying, where they literally push out bad information to the masses, because why would you...
Markets like this, look to take trades in and moving in a sideways...
Why would you buy and sell? Like this is what they call it, support and resistance. I don't trade that shit, dog. I don't. Because it's just confusing. Like, why would you confuse yourself like that to just continue to sell, then buy, sell, then buy, then sell, then buy? Wait until it starts trending and then get involved into the market. Because once this breaks out, right, it's like trading is like a rubber band. Like, once you pull it back and you let it go, it's going to keep going. Like, for real. So just wait for a breakout and then trade the trend. Do not trade consolidation, because you're literally going to put yourself at risk for no
direction. In markets like this, look to take trades in both directions with confidence. So, how do you identify momentum gain? The first way to identify momentum gain is to look for tight price movement. In an uptrend, notice how prices vary tight together without wide swings, which shows buyers are in full control and that not enough sellers are in the market to cause swings in the opposite direction. You want to trade with this upwards gain of momentum and not against it. In the opposite direction, in a downtrend, notice again how price is very tight together without wide swings, which shows that sellers are in full control and that there are not enough buyers in the market to cause swings in the opposite direction. You want to trade with this downwards gain of momentum and not against it. So the second way to identify momentum gain is candles growing in size. In an uptrend, notice how each candle is getting larger and larger and moving a greater distance per candle, which shows a gain in bullish momentum. You want to trade with this gain of momentum and not against it. And in a downtrend, notice again how each candle is getting larger and larger and moving a greater distance per candle, which shows a gain in bearish momentum. You want to trade with this gain of bearish momentum and not against it. So how do you identify momentum loss? The first way to identify momentum loss is to look for wide swings of price after tight price movement. So this uptrend here is tight price movement, which means the buyers are in full control. You then had wide swings occurring, which shows momentum loss and that the buyers are no longer in complete control and can lead to a possible reversal of price if paired with trend change price action. Going in the opposite direction. This downtrend here is tight price movement, which means the sellers are in full control.
So for
You then had
example, in this trend, like I just said, right, we're in a downtrend, clearly as day. We have a trend within the trend. So let's say like this was a daily trend. This 4-hour move right here that y'all see, these small little impulses, are going to come back into this order block that y'all can see right here, clear as day, this green one. Go into here and then possibly, right, because I'm not a forex guru, I don't have 100% win rate. This trade can possibly come into here and then continue its movement down because that is the trend. I wouldn't be trading down here. This is consolidation right here. This is a downtrend, consolidation, uptrend.
Had wide swings occurring, which shows momentum loss and that the sellers are no longer in complete control and can lead to a possible reversal of price if paired with trend change price action. The second way to identify momentum loss is to look for shrinking candles. In a downtrend, notice how you start with a big red candle and then every candle after gets smaller and smaller, which shows a loss of downwards momentum as the distance traveled per candle is less and less. This can lead to a possible reversal of price. In an uptrend, notice how you start with a big green candle and then every candle after gets smaller and smaller, which shows a loss of upwards momentum as the distance traveled per candle is less and less. This can lead to a possible reversal of price. The third way to identify momentum loss is to look for a candle color change after you have consecutive candles of the same color. In a downtrend, notice how you have all red candles before a green candle appears. This shows momentum loss because price failed to produce another candle with a lower low closing price and instead made a higher closing price through the green candle. This can lead to a possible reversal of price. In an uptrend, notice how you have all green candles before a red candle appears. This shows momentum loss because price failed to produce another candle with a higher high closing price and instead made a lower closing price through the red candle. This can lead to a possible reversal of price. If you want to take your trading to the next level, head on over to our website at Wise.
But listen, that's gonna be the end of this video. I could show y'all on the chart, but I'm pretty sure everything he explained y'all get. Like, it ain't much to it for real. Go to you. So for example, what I was just showing y'all, on the daily time frame, we have this downtrend, right? As y'all can see the line, the yellow line, that's the downtrend. But then on the 4-hour, we clear as they have an uptrend. So I'm waiting for it to come back into this order block right here, to open, and then eventually go down and take all these lows, okay? So that's pretty much how trading works. Like, it's just simple patience, reading what's going on within the market, and then following the trend. The trend is your friend. But yeah, man, that's going to be the end of this video. Hopefully I did enjoy and learn something new. I'm going to catch you on the next one. DHS is out. Gang.